Swing trading is very popular among us traders. Why? Because it gives us the opportunity and the flexibility to make money from the market without giving too much attention to it. Imagine you're an options trader or you're an intraday equity trader. You have to be hyper focused in front of your system from 9:15 a.m. to 3:30 p.m. And this is not ideal for a lot of people. And that's why swing trading is very popular. But what if I tell you, you can improve your swing trading strategy by incorporating this one technique which will 100% give you more volatile, more movement stocks, right? That's what all of us want. When we decide to pick a stock, it should be moving very much. We don't want a stock that will give a movement of 1, 2, 3%. We want a stock that will give us 5, 6, 10% movements, and that is what we are going to discuss in this video. First, we'll discuss a simple screener with which you can decide what stocks to add into your watch list for swing trading. Then we'll get into a simple swing trading setup which you can incorporate to decide when to enter these stocks. So first you understood, right? We took a filter and we understood what all stocks to trade. Then second, I'll tell you how to trade it, how you can use a very simple strategy and think of it as your input signal. We have discussed this concept in detail before. First you got the stock, then you got the input signal with which you can decide to enter that stock. And yes, the rest I'm sure all of you know, because even in this channel we have posted a swing trading strategy multiple times. Even the last video, a lot of you really liked it. It got nearly 2 lakh views and a lot of you requested me for more such videos. So that's what we're going to discuss today. So if that's the case, what are you waiting for? This is Ajay Ajith. Welcome to Market Feed. So let's get to the first part. This is where you select the 10-15 stocks that you're supposed to be adding to your watch list. Because again, there are hundreds or thousands of stocks listed in the stock market. And out of all those, you'll have different opportunities coming out at different times. But you want to find the right opportunity for the right time. And here, what did we say? We said we want to only look at stocks which give high momentum. And that's what we are going to screen today. So first we'll open ticker tape. Again, this is not a paid promotion. If I'm showing you any product and I'm getting paid for it, I'll make sure I'll disclose it to you. That being said, please go check out the Market Feed's free webinar that I'm hosting very soon. I'll have the link in the description where we'll be discussing how you can make 2 returns with 1 capital. I know, an interesting concept. Yes, if you're interested, go check out the free webinar. Let's get on with the video. So first, come and open ticker tape. It's a free tool. We have showed it before. Come to the screener tab. I'll give you the exact link in the description. Do not worry. And click on the start screening option. So what can you see here? A list of 5,292 stocks. That's how many stocks you have across the Indian stock market. But no, you can't look into every single one of them. It is almost impossible. So let's get to screening or shortlisting our number of stocks. So the first thing I'll do, I personally like to mostly trade in the Nifty 100 universe. Again, if you do not know what Nifty 100 is, you can click on the I button here. You can see that Nifty 100 represents the top 100 companies based on full market capitalization. If you're looking at all the companies in India and you sort them by market capitalization, you'll get the top 100 companies, and those are the stocks in Nifty 100. So once we select Nifty 100, automatically you're up to the first 100 results. But I know a lot of people will have a concern here, which is there are stocks in Nifty 100 with more than 30,000, 12,000, 10,000 rupees as a single share price. And if you're a casual swing trader who's trading with maybe a 1 lakh rupees capital, you'll have to intelligently divide it into few stocks. But then if one stock itself costs you more than 30,000 rupees, your money management will become more difficult. So let's do one thing. Let's come here and select stocks only under 3,000. You can select your filter. One thing to make sure here, there is no relation to a stock's price and its movement. Okay, let's be very clear here. Even a 30,000 stock can move up 10%. Even a 3,000 stock can move up by 10%. There is absolutely no difference here. And the amount of money that you make, the amount of profit that you will be making, it is the exact same for both of these cases. So once that is done, you're immediately down to just 75 stocks here. Again, what do we want? From these 75 stocks, we want to select the most volatile, the most high momentum stocks, maybe 10 to 15 or 20 stocks from these 75 stocks. That's what we are going to filter here. So come click on the add filter button and you'll be searching for beta. Okay, I'll explain what beta is here. Beta is a measure of a company's stock price volatility relative to the market. That means a high beta stock will move much more than the average market. Let's say Nifty is moving by 5%. This stock could give you 7, 8, 9% movement. Hope you got it. But make sure that you understand the concept of beta is unrelated to the stock's direction. So high beta can mean the stocks moves up very fast, but also moves down very fast. It is highly volatile. What is our aim here? Our aim is to find these high volatile, high momentum stocks, add it into our watch list, and then to take an intelligent trade. So wait for the intelligent part. Let's find out the high momentum part here. So once you click on this beta number right here, you can see that we have filtered or we have sorted the entire list according to beta. And what can you see here? We have Adani Green Energy, we have Adani Energy Solutions, there's Bajaj Finserv, IndusInd Bank, and there are a lot of companies that you may have never even heard of in the Nifty 100 universe. So what do we do here? Let's quickly do one thing. Let's select the first 15 or 20 stocks from here. Okay, so come to ChatGPT and give it this prompt. Take the list of all the companies I'm giving you and return the NSE symbol of all the stocks separated by commas. Okay, that's what we're going to give, and let's wait for ChatGPT's result. So ChatGPT has given us the results here. These are the ticker names or the NSE symbols of the most volatile, most high momentum stocks out of all the Nifty 100 stocks. So let's do one thing. Let's copy this, just the stocks part. Come to TradingView. Again, it's a free tool. It's not a paid promotion. Come to TradingView. Add these stocks into your watch list. So you can see a plus button here. Click on the plus button. Copy or paste the entire symbol thing that we copied from earlier. Paste it and automatically all the stocks are immediately into your watch list. So you can see that Adani Energy Solution is here, Adani Green is here, CG Power is here. So you can see that how quickly all of these stocks have been loaded to your watch list. So the first thing that you have to do is come open Nifty's chart. So you can see or identify Nifty's trend here. So you can see that Nifty, after having a lot of consolidation or being in a bearish trend, now it is giving a breakout and now it's in a bullish trend. Okay, so that's the first thing that you need to identify. Whenever the market is in a bull trend, you should be going after the bullish stocks in your watch list, or you should be going for bullish trades. Do not go or do not try to go against the market, because as always, these are Nifty 100 stocks. These are already very fundamentally good stocks. These are already moving along with the market. So make sure that you only trade with the market's trend. So first thing, you come identify the trend here. Now again, you understood that for now, Nifty is in a breakout zone. It's moving up. So if you find opportunities which are bearish in nature, it is best to avoid those situations. Okay, so now that you understood that Nifty is bullish, let's take an example. Let's open a random stock from our watch list. Let's go with DLF here. So you can see that DLF is also now consolidating. Let's try to draw a rectangle here. Okay, so we can see that DLF is consolidating near its low here. And okay, so these levels look interesting based on the last few months of data, 2025 Jan to now, it looks interesting. Okay, let's zoom out. So we can see that the zone DLF is in right now is a very interesting one. So it has taken support here multiple times. It has taken resistance here multiple times. And if it gives a breakout, there is a high chance for the stock to at least go to its nearest swing high, which is around 793. Or even if it comes down, there is a decent space for you to keep your SLs, right? Somewhere around 640, 650 is where you can plan your stop losses. So what do you understand here? Again, this is not a stock recommendation. First, you identified the market's trend. You identified which stocks could give you higher momentum than the entire market, which could give you maybe instead of 3, 4, 5% returns, could give you a movement of 7, 8, 9, 10% returns. And then you saw that this stock is having a technically bullish setup or a technically breakout setup right here. So it has made my job very, very easy here. I've got the stock, I've got the levels through technical analysis itself or price action itself, and I can choose to enter this stock very, very intelligently when it gives a breakout. So now you got one trading setup which is pure price action based. Whenever a breakout happens, you can go ahead and take a trade there. That is pure price action. But let's say you're a beginner and you want a more simple setup, right? That you can understand instead of taking your time out to learn price action, but I'll definitely recommend that you train yourself with price action. Let's open another stock for simplicity's sake. Let's open Gale here. So come click on the indicators button and add an exponential moving average. Okay. I'll want you to add two EMAs. Come here and change the length of one EMA. You can click on the settings button right here. Change the length of one EMA to 10. Change the length of next EMA, the next moving average, to 21, and also change the color because you want to identify it very, very easily. So now you can see that the yellow line is your 21 days exponential moving average and your small blue line is your 10 days EMA. So whenever a longer time frame EMA is crossed by a shorter time frame EMA from below, it is always a bullish sign. So you can see our blue is our more reactive, our more shorter EMA here. So it is crossing our yellow line very, very easily here from the bottom. So it indicates that the stock is going into a bullish trend right here. I'll give this a pink color. So you can see that from around right here, it is a good indication for you to go long on the stock. Again, this is not a stock recommendation. This is just a strategy. I want you to use it very intelligently according to your other analysis, according to proper capital allocation, risk allocation techniques. And when do you have to exit this trade? Whenever this EMA crosses back, you can decide to exit this trade. You might not get the full rally. Right? You might not get the full rally because only when the rally slows down, let's say somewhere around here is when you might get an exit, but it is okay. On the daily time frame, when you get a confirmation in the daily time frame at closing time that this faster EMA has crossed the slower EMA, you can decide to enter and exit. Okay? That's it. So that's two simple trading setups for you to use. Again, I've made a detailed video on another swing trading strategy using delivery and stock price movements to identify institutional movements in and out of stocks. You can go check that out here if you are interested by this video. But I don't want to wrap up here. I want to make sure that you understand the importance of capital sizing or position sizing right here. So we have made a very simple calculator here. So you can come to Google and you can search swing position sizing calculator market feed. Okay, and you'll get the swing position sizing calculator here, and you can see again that's the webinar's link for you. But you can come enter your exact capital here. Let's say you're a beginner, you're starting to trade with 1 lakh rupees. Come enter the number of trades that you'll be having at the same time. Again, if you want to learn this calculator in depth, I've made another video. You can go check that out. I'm giving you a simple gist of it. So come enter that at least 5 trades at the same time you want to run, right? That's what you want to run here. And on a single trade, my suggestion is you should not be risking more than 2% of your account on a simple trade or on a single trade. So make sure you keep this at 2% here, and you can enter the entry price that you're planning. Let's say for Gale, you're planning to enter at 185 and your stop loss you're planning at somewhere near 170, 168. So you can say 185 is my entry price, 165 is your stop loss. What did you get here? You understood or you have a plan. That's your first thing, right? This calculator showed you how to think, how to make a plan. That's the first thing. And it also shows you put only or buy only 100 quantities. If you want to follow your position sizing, if you want to follow your percentage risk of account, only buy 100 quantities, not more than that. And you can see if your SL is increased, that means you're taking more and more risk on that trade. What happens here? Intelligently, the quantity that you're supposed to buy comes down. So make sure before you take any swing trades, you come here into market feed swing position sizing calculator and you decide to enter the values, and you can get the exact trade or the amount you should be putting into a trade right here. So I think the video, its concept, its crux itself is very simple. What is the crux of this video? It is to find that high momentum stocks which are going to give you much more movement than the market. Right? That's what the crux of this video is. Then we got the filter. After that, you got the input material, the input signal. It can be the price action based trading strategy that I shared. It can be the EMA based trading strategy that I shared. It can be your own swing trading strategy. But whatever the input signal, any signal or strategy that you take, make sure that you try out this high momentum stocks by using this simple screener here. So before closing, I want you to look at these few things to consider. The first thing is that there is always a chance of high gap ups or gap downs. If you're going long, again in the Indian markets in swing trading, most people go long, right? Most people do not take futures trades and go short in the market. So whenever you're going long, whenever you're buying a stock for a swing trading position, there always exists a chance for a gap down. We have to be understanding, and dividing our capital into 3, 4, 5 stocks always helps you to reduce the risk of a huge gap down coming in only one stock. Let's take an example. Let's say Infosys during the time of its results had a gap down of 5% in a single day. No matter what trade that you had taken, no matter whatever your stop loss was, it would have ended up with you being in loss. Right? That is not an ideal situation. So what is the only thing that you can do here? Always be prepared or have it in the back of your head. There can be huge gap downs. So in order to make sure you're not affected by it, make sure you have at least 5 stocks, right? When I showed you the calculator also, I gave you that. Make sure you have at least 5 stocks or enough capital to trade in 5 stocks available. That means if you have 1 lakh rupees, do not put in more than 20,000 rupees per stock when you're going into swing trading. Do not put your entire money into one single stock. Hope that is clear. Now, the third most important thing here is do not underestimate swing trading. I know a lot of you might be coming into this world of the stock market by seeing options trading, right? Or intraday trading. And that can give you a lot of profits if you do it the right way. But if you do not know how to do it properly, your chances of getting your hands burned is much higher in intraday and even in options trading. So this is a fairly simple way for a beginner to start investing their money into the stock markets and start making hopefully some returns which you can be happy about. So if you like the video, make sure you hit the like button and the subscribe button as well, so that YouTube can help us reach a lot more people. And I know a lot of you might have been waiting for an aftermarket podcast episode today, but we'll be back next week. So make sure you're tuned into that as well. So if you got the entire concept, make sure you ask any and all doubts in the comment section down below. This is Ajay Ajith signing off. See you all again. Bye bye.